This is part 2 of a series on how to fund real estate investing deals. Most people get caught up on that part. How do I fund the deals? Or how is that guy funding so many? How is that gal funding so many real estate investing deals? We have a simple approach and explanation of how to fund any type of real estate investment deal. I'm about to show it to you behind me, and then I'm going to dig into how to find and where to find each one of these money sources. Let's go. All right, so quick explanation in case you didn't see the last video of what the 3-bucket theory is. You need basically 3 types of fundings if you want to fix and flip or if you want to do rentals with the BRRRR method. The first bucket you need a purchase funding bucket. You need a bucket of money and people to actually purchase the properties. The second bucket is the repair bucket. The reason you're buying these properties is because they need work. You're gonna fix them and flip them, or you're gonna fix them and keep them as rentals with the BRRRR method. That's the second bucket. The third bucket, if you're doing rentals, not if you're gonna flip it, is you need long-term funding. You need to have a mortgage on the property at a low interest rate over 20 to 30 years so you can actually cash flow as the tenant pays it off. So the purchase funding bucket, we're gonna talk about where to find private lenders. We're going to talk about where to find hard money lenders. Then when we get to the repairs bucket, we're going to dig into the line of credits a little bit, the different sources and types. And then we're going to talk about who the small banks are, where to find them. And then we're going to talk about who the credit unions are and where to find those. Before we do that though, make sure to hit that like button over there. Hit it now. I'm going to wait. Thank you for hitting that button. I appreciate that very much. Make sure to stay tuned to Macy's Joke of the Day and make sure to comment on this video and every other one of our videos because A, I think it's cool, and B, we're giving you a 1-hour free Zoom lesson with me, just me and you, one-on-one, once a month. So every single comment in each month we're going to put into a software that we have and we're going to randomly pick one of those comments. So commenting on this video and any other videos in this month will up your chances of getting picked. And once you get picked, we'll contact you. We'll set up a time that works. And for an hour-long session, I'll try to either help you kickstart your business or maybe help give you some ideas to improve your business. All right, back to the theory. So private lenders are individuals that are willing to lend you money and diversify their type of investment because they trust in you and they trust in real estate and they're trying to diversify their portfolio. It's not usually a rich uncle or your grandma. Sometimes it is, and that's awesome if you have those connections, but most people don't have that rich family member. Usually who hard money lenders are is they're my mom's boss or my grandma's neighbor or maybe just a business associate or something. It's usually a connection of a connection, and sometimes it's people you don't even think of. One of our private lenders is one of our insurance guys. He does pretty well, but he's not like a bajillionaire. He doesn't have, 20 million, clients or anything. He just does pretty well, and he's a little bit closer to retirement, and he wants to diversify his portfolio. So he's giving us $150,000 that we can use per property basis, and he gets an 8% return on it. It's nothing crazy. He doesn't have $5 million to spend. He doesn't have that much money. He just has some extra money, and he knows and trusts us. Another private lender that one of our team members has it's his tax guy. Tax guy does all right, but you wouldn't think of that person as a private lender. You just need to open up your thoughts because that tax guy was doing his taxes and saw that he's using hard money lenders, saw what he was paying, and he's like, I can, invest in you. I know that you know what you're doing. I've seen your tax returns. I know that you know what you're doing. I'd be willing to do this for an 8 or 10%, whatever they settled on. So just think of anybody that potentially has some extra money. It doesn't have to be millions and millions, but that's willing to diversify, that you know really well, they trust you, or they've kind of always wanted to get into real estate investing, but they don't have the time, money, energy, or education to actually do the work themselves, but they want to make a return on you and the process because they understand the process. Now, private money lenders are the golden egg, the golden goose, so always be searching for them. It might take you 2 months to find, but it might take you 2 years. There's other funding and other buckets and other things you can get into to fund the deals, but always be looking for private money lenders. If you don't find one right away, don't get discouraged. All right. Hard money lenders. Now these are a little bit different. These are companies that their sole purpose of them is to invest in real estate for the initial purchase and sometimes the rehab. So what they do for the most part, they usually borrow money from a bank or a person at a low interest rate. then mark it up, usually mark it up 5 to 7%, and then they make money on that arbitrage or that difference. So they borrowed at 5% and loan it out 12%, for example. Kind of your typical terms here are usually 8 to 12% annualized, and that's usually 12 to 15% annualized. Sometimes there's points, but we're not going to get into that. But just know these terms are usually a little bit better. These are usually a little bit more, and someone might say 15%, that's crazy. Just understand it's short term. You get in and out quickly. You might have that money out only for 3 months, so you might be paying a little bit more in interest, but you get in and out quickly, and if it's your only way to fund the deal, it's better to pay a little bit extra funding than not do the deal, because hopefully you're either getting an awesome rental or you're making a good chunk of money on a flip. You find hard money lenders by just simply Googling hard money lenders near me. I tell that to people sometimes, they think I'm kidding, but just Google hard money lenders near me, or just Google hard money lenders, because Google knows where you are, and look, and they will pop up. They're legitimate businesses, or most of them are, with websites and reviews that you can look and vet a little bit. Also join your local real estate investing Facebook groups, and a simple post, who's the best hard money lender in town, will garner a lot of comments and responses from the actual hard money lenders and people that have used them. And join your local real estate investing meetup groups, where a lot of those groups have hard money lenders as sponsors, or hard money lenders attend those groups to try and garner business. So those, it's pretty easy to find at least one of 2 of those pretty quickly, but even if it takes some time, it's worth it, and you need it to get that initial purchase. Let's move on to bucket number 2. Bucket number 2 is the repair bucket. Now that you've bought a property at a discount, you can see some of them are the same, but there's some different options too. So once you've bought the property, you can use a private money lender to do the actual repairs. Let's say you buy it for $100,000, a private money lender gives you $100,000, and it needs $50,000 in repairs. Lots of private money lenders will just give you that whole $150,000, so you can buy it and fix it up. You might have to get a little trust from them at first, but a lot of them, most of them, are willing to do that. All right, the next one is HML, a little lingo for you, hard money lenders. Again, this is probably a little more rare to have a hard money lender willing to fund the purchase plus repairs. A lot of them will fund the purchase plus the rehab, or the purchase plus most of the rehab. Which brings me to this last one, lines of credit, which are credit cards, or like a home equity line of credit on your personal property, or maybe a line of credit on another business you have, or another house you have if this isn't your first deal. You can pull the lines of credit on equity in businesses or on houses. A bank, most banks will be willing to do that with you, or a credit card. Lots of people will use low interest rate credit cards to fund a lot of the repairs. The cool thing about this is these 2 buckets, you can kind of mix and match. Lots of times you can use a hard money lender for the initial purchase, and then you can use a private lender for the repairs, or you can use a line of credit for the repairs maybe. You can kind of mix and match a lot of this. They don't have to be the same person for both, and make a deal worth getting creative. The last is the long term. Now these 2 are for fixing and repairing a property. Lots of times after people fix and repair a property, they sell it. So then you're done, you don't need this 3rd bucket. This is if you're trying to buy rentals through the BRRRR method, which, click on this video somewhere up there, goes into more detail on this exact whiteboard about the BRRRR method, if that interests you. It's a way to buy rental long-term cash producing assets with other people's money. So these small local banks is going to be your number 1 place to go, in my opinion, for this. These are banks, their sole purpose of being in business is to lend money to deals like this and hold the note for 15, 20, or 25 years and make money on that interest. These banks, they're usually, in kind of more rural areas. Maybe they have branches near the city, but they're usually kind of on the outskirts of town. Like some of the banks we use are First State Bank of St. Charles. We live in St. Charles County. It's the First State Bank of St. Charles. Now, they're not going to lend if you're down in Texas, more than likely, or out in California, but they lend local. So there's banks like that, bank named after a county, or something that's just the small banks that usually, they have, 3 to 10 branches, maybe something like that. They do loans like this, so go find them. Maybe the first few you talk to don't, but as you talk to these banks, you say, hey, I'm looking to fund a rehab and do a 80% cash out refinance and hold it as a long-term rental. Do you do those types of loans? They'll know exactly what you mean. If they look confused, they don't do them. So they'll know what you mean. How you contact those people is you want to talk to a commercial lender at the bank, the vice president of commercial lending, or just a commercial lender, because these are commercial loans. You can just go to the website and fill out a form and ask for their contact, or sometimes their contacts are on the website, or join your local estate Facebook groups and meetups, and in those groups and meetups, there are people that have used banks that we willing to give out because they love the bank that they work with more than likely, and they're wanting them to get more business, so they will tell you who to go to. The other source is credit unions. I'm not as familiar with these, I want to be honest with you, because I don't use them, but the people, I know a lot of people that do have great luck with them. They're very similar to small banks. They're willing to do loans like this and they keep them in-house, I believe, for the most part, and make money on the interest. So credit unions are definitely an option. Very similar to banks. Again, go to their websites or contact someone in charge of the commercial lending division and ask them if they do either BRRRR deal or BRRRRs deals, or they just do the 80% cash out refinances on long-term loans for rentals. And you can find the contacts from the websites, or also obviously driving up to them, or in the Facebook groups and the meetups we talked about. All right, so that kind of finalizes our series on the 3 bucket theories. What are the 3 types of funding you need? And this video, how to find them. So hopefully that helped. Just understand that my goal is to have funding not be an issue for you. If you understand all this, your main issue is going to be finding the deals, which we have other videos on, but actually lining up the funding and understanding the funding, hopefully this helped take care of that. All right, Maisie's joke of the day. My hotel tried to charge me $10 for air conditioning. That wasn't cool. All right, thanks for watching, guys. Appreciate it. Check on the next one.